fine, beautiful people that are in the chat watching us from all over the world and parts unknown. And we're going to say thank you once again for gathering here in our weekly dividend communion. Special guest friend of the show. And I did verify. I verified, unless it's some damn good animatronics or something going on. You are a real live human being, Ryne. So,
yeah. Hello, TV land. Hello, BBC. Happy to be here with you tonight.
Love it. Dude, and the black on black, too. We're both back in black with the Black Cat Customs and the black flag.
Heck yeah.
So good to see all the familiar names, which you guys are. Tell us what you're buying. That's one of the things we love to see is what are you guys buying out there in real? I guess you could make something up too. How would we know? We wouldn't know. But as for me, I was telling Ryne before we came on that I've been busy all weekend doing a volleyball tournament, and I'm going to show you guys a couple quick clips, so stick with me here. And he asked, have I been out in the sun? I've been out in the sun. I was hanging out outside of Navy Pier, and I think my mic will work while I'm showing this. So first of all, we were gathered with other adults, other volleyball moms and dads. This is Navy Pier in Chicago, and this is what I did all weekend. Hung out, and, had some adult beverages and some good talk and sunshine. And, it's an experience in life. It's something that I was telling Ryne, like, you don't want to be the richest person in the graveyard. I know I didn't say that to you, so don't think you're losing your mind.
Did you, sorry to cut you off. Did you listen to the Dividend Talk podcast from last week? The Grandpa's Rules. Do you know what I'm talking about?
I sure did.
I listened to that today. That was one of Grandpa's rules, was to not be the richest guy in the cemetery.
Where do you think I got it from, man? Where do you think I got that from? This stuff doesn't just pop in my head. But
well, I thought it might. I don't know.
No, I've heard that before, but it was a great reminder. And before we I'm going to show you guys one more thing. This is how crazy it gets. So this was a tournament of 15 to 18-year-olds at Navy Pier. I think there was like 50 courts. So check this out. I went upstairs and got like a eye in the sky.
Wow.
It's insane. The noise is nuts, and it's all girls. I didn't see any boys teams, but yeah, it was crazy. And then I got to end it with my pride and joy. My daughter, you're going to see Ivy Knopf doing a little fake out. So it's a 5-second little clip here. You guys might enjoy this. I know I do, but hey, I'm biased. So she faked out, and she's an outside hitter. And instead of hitting it, she instead just tipped it over, or like that. I don't want to lift it. Tipped it over the blocker. So check this out, everybody. I'm the only one that's really going to care. It's not all about the power. Sometimes it's about a little bit of trickery and finesse too. Like when we dividend invest, you don't always have to power through with those high yields. They're not always what they seem. So, all right, that's enough of that. Enough story time. But the point is, there was a point to it. And I know I told you this, Ryne. I said, stories are boring when there's no intention and obstacle that you're seeing someone trying to overcome, or there has to be a change at the end of the story. And the change for me is that I figured out that my last month, I saved 32% of our income, and I still struggle with spending money. And I had the kids, I bought them lunch, and we had our younger daughter and their cousin. I paid for them to go on the Ferris wheel and do all this other stuff. And my wife was giving me the side eye like, who is this guy? Like, what'd you do with my husband? But that's the change. I realized, you know what, this is only temporary, and hey, not to get morbid, but this is motivational, and this is the only kind of thing you're going to hear from this lunatic on this side of the screen, is that the world is going to forget that you existed one day. Probably 99.99% certainty. So have some experiences that you enjoy with people you care about in this life while you're here. So, Ryne, how's it going, man? What have you been up to?
Man, I've been living the dream. Things are going really well. I can't complain. But not been up to too much, just working and, researching stocks and living life, man. It's really hot here in Vegas right now. We're officially in triple-digit territory.
Yuck. Yeah, and when I was there in April, I was wearing a jacket, so
yeah.
Not we're gonna say hello to some people. Not my cup of tea out there. We got the cicadas though. I was doing yard work, and they are toward the end of their life cycle. They're getting aggressive. What a
There's
life
this.
cycle they have. Do you know about cicadas?
I'm somewhat familiar with them. Yeah.
This is great, and this is the dividend investing happy hour. We're talking volleyball and cicadas, breaking all the rules here. But maybe there's some kind of tie-in that I haven't thought of to investing. But yeah, they climb out of the ground every 17 years. They go up in the tree, they get wings, they mate, and then they die. But the whole time that they're adults, they don't even eat. So they literally don't eat for the 3 weeks or whatever they're alive, and then they die. Mate and die.
That's crazy.
So,
Every 17 years.
yeah, every 17 years they come out, and there's different broods. Like, I think of it as like a gang. So there's different broods, and the two biggest broods, they're like number 5 and 7, whatever they give them numbers. They emerged at the same time, and the last time that happened was 1803 when Thomas Jefferson was president here in these United States of America. So, run down you people. What's up, Shannon? I did read that right, Greg. He's calling us genital men. All right. Hey, we like it, man. We like it. Kevin, Jim is talking to Kevin. I got confused. I think, what does Kevin Burgess say? There's a quorum of Kevins, I think, so they can get, I don't know, this drug dog bark. I guess I didn't need to put that on the screen, but here we go.
Sounds like Jim's going through the ring of fire over there.
I think so, man. I don't have do you think you'll ever get a dog? These are the burning questions people want to know when they come to the dividend investing channels like ours,
I'd love to get a dog at some point. I'll do that when I have more space. With the current setup, it's just not feasible. But I'd love to have a dog at some point. I grew up with dogs. I grew up with both dogs and cats, so I like them both.
I've been a cat person. Dogs are let's just say when we were at this tournament, we were with my brother-in-law, and they have a big German Shepherd, and she had an accident in the house, and it wasn't pleasant when they got home. So they were all tired, wanted to go to bed, and they spent about an hour cleaning. So that kind of told me, I'm good with cats. I like them. I don't know. I guess I'm more of a cat person. But yeah, Darth, he told us this. He was buying United Health and Visa, and United Health just raised their dividend, I think. I think they just raised it.
Yeah,
right?
Quite a bit. Definitely, I think it was double digits. I think it 12% or maybe even more.
We might get that into the news, or maybe that was last week's.
Okay.
I don't remember. There we go. Steve sees hoarding cash. Oh, the cash. And Shannon, here we go. Shannon bought,
Nice.
Look at the tobacco stocks. Bought Realty Income, Universal, which is a tobacco. They grow the tobacco.
They grow the leaves. They grow the tobacco leaves.
And Altria. Yeah, I don't know, man. You're still in Altria, aren't you?
Yeah, I'm holding.
I'm not judging. I'm like a bartender, dude. I'm not judging. I'm just,
I'm really on the fence about what I'll do with Altria. I feel like the dividend will still be intact. I'm still pretty well covered. So I don't feel like it's at any immediate risk of being cut, but the stagnant revenue growth is something that's really concerning to me. So I want to see how this kind of plays out a little more before I make any conclusive decisions about it. But that is definitely something that is concerning me right now with it. We'll see what happens.
I think it's good. Yeah, it's if I was retired already, I probably would have held on to it. Well, maybe, and there's kind of like the financial component, the business component to it, and then the moral component, and again, it's legal. You guys can do what you want watching, but for us, we just, it was that stagnant revenue, and like I showed it, they're financially engineering, very great management team, but if revenue just starts declining, that's only going to go on for so long. So. Nice pickups.
There's a certain point where they won't be able to cut costs any more than they already have, right? So I don't know.
Exactly.
Let's see where it goes.
Exactly. Rick bought Realty Income and Pfizer. By the way, when I was doing yard work, I just saw Peanut. I just saw him, man.
You know what that means, guys?
Present. I'll drink water.
Gotta take a drink. Even on Russ's stream, we got to play by the rules.
I love it. What's one that Shamir said? When I say you people, I think that's one of the ones to drink.
That's a good one.
Anyway, I listened to Dividend Talk, and they did 10 dividend stocks they'll never own. And spoiler alert, one of them
Yeah.
was Pfizer. And with good reason. So if you guys don't listen to Dividend Talk, I love it. I listen to it every week. It's a podcast I really do enjoy. Oh, Bose, I think, is checking in from Denmark. Look out, man!
300.
Why are you up so early? That's crazy. Making me give me that military feeling again. Greg, another UNH Visa, and Core. That's Corient, I think. Healthcare. I forget COR. Do you remember?
Russ, where are you
That
at with Visa right now? You bought 2 shares this week. Are you at 14? 14 shares
No,
now?
I'm at 12 shares.
You're 12?
I'm at 12.
Okay.
Yeah. 12 shares of Visa. So and of course I get upset that it's run up so much, or not so much, but it's back to it was around
Yeah.
280.
You know what's crazy? Guy, he watches our videos. He's usually in your stream in your live chat here. Do you know who I'm talking about?
Yep, absolutely.
He
He's a nurse.
Yeah, he has 155 shares of Visa. That's insane. That's awesome.
Apparently, I motivated him to start the 100 shares or challenge,
yeah.
one a week for 100 weeks, and he started that with Visa. Kind of wish I followed along with him, and I was like, I'm like, Visa at 240. I'm like, dude, this is overvalued. And it just goes to show, you don't. Sometimes it's very difficult to predict exactly how good a business will be. Shamir, there he is, checking in from Ottawa. Hasn't bought anything. This is a smart decision. I really like this, Matt. I think this is going to turn out well, that he put his life savings in GameStop shares. And I would say, why stop there? I would probably max out your credit cards and probably open up a few,
Yeah, get a second mortgage.
Second mortgage it, whatever you can do. Get all that money in there, Matt. Nice job. And Shamir's drinking regular Coke. Not one of the...
Shamir is living large on the weekend.
What is this? This is breaking news. Shamir, you have a YouTube channel? I didn't know that.
Man,
wow.
So Shamir put out there's a link to his video in the Discord group, Russ. And I'll text it to you after we get off this stream too. But so Shamir put out a video. He just did, sorry Shamir, I'm speaking for you. But he basically just got this big Amazon haul of all these different books. It was really, really fun to watch. He got it's like For God, Country, and Coca-Cola or something like that. I don't know if I got the title right, but it's the Coca-Cola book. He got the Howard Schultz's first book. I don't remember what it's called, like cup of something or other. He got the Texas Roadhouse book, the McDonald's book, and I know I'm missing one or two in there, but really, really good little shopping spree there.
Dude, I'm gonna watch that. I'm gonna subscribe. You got another subscriber here, Shamir.
Yeah.
That's fantastic. I love it. Our Whiskey Tango Foxtrot. I think this is a dig on me about E4 being late again. I was in E4 when I got out of the Navy, so that's enlisted 4. So I don't know what I'm late again. What am I late on? I don't know. See this, I'm gonna get caught up here. I really need to. But Jim, Merck, Vici, Coke. I'm going to go a little bit quick here to get caught up because I hate it. I hate when I'm watching a live stream and I ask a question and 10 minutes, 15 minutes later it gets answered. Juul's now on the FDA good list. I didn't know that. Nice. It's still not going to change the fact that Altria took a massive write down on what it wasn't. Do you remember the number? 40 something billion? Or
I think they lost something like over 90% of the value of their investment, I believe. I think it was maybe even like 98% of the value of the investment.
I haven't even, not that I look, but I haven't even seen Juul in stores. So maybe now, I don't know. Maybe they can recoup.
It's still there. It's still there. I see Enjoy a lot too. Like if I go down to the strip, I'll pop into the ABC store or something like that to get a couple cut waters. And I always look to see what they've got. And even if I go to the gas station, I always look to see what they have there. And a lot of the Altria products are like front and center. So that's always good to see. At Walmart too, every time I go grocery shopping, I look because they always put them up right by the checkout, the self-checkout. And Altria's front and center every time.
Yeah, I did notice when I went to the gas station this week, the nicotine pouches. which is interesting. There's no tobacco in it. It's just flavored nicotine, I guess. So
Hmm.
I think here, Kevin Redberg, he always slips in the door quietly, making a lot of noise there, Kevin, because we always see you when you come in. He bought UPS. Ooh, one I don't recognize, GSBD, Bristol Myers Squibb, J&J, and IPG, Interpublic Group, I think that is. Nibbled on a few other positions. Very nice. Phil was popping, man, from Montreal. Merci beaucoup. I don't know. I don't really know any French. I think that's thank you, right? I probably just told him thank you. There he is. There's Kevin, the man, the myth, the legend. We called him, I dubbed him Indiana Burgess because of the hat he's wearing now. Looking nice, dude. It reminded me of Indiana Jones, which is a very, very fine compliment, sir.
Kevin, how was? I want to know how your trip went.
You're hearing me? I'm waiting. I'm like, yes. How did it go?
Yeah, tell us, Kevin.
That's not how this works. Just talk at your computer screen. We'll hear. All right, I'm getting caught up here. Quick, Gorilla Nurse, U.S. Bank, Viatris, right?
Mm-hmm.
Hormel, and PSTL. That's the Postal Realty REIT that I looked into a while ago, and they only have post offices. Interesting. I'm scrambling on down here to get caught up. I love it. I haven't seen you before, Wallet Invest. Driving Uber on the weekends as a side hustle to buy one VTI share per week. And you're going to be fine with that. VTI is not going to go anywhere. It's just self-cleansing. It's just going to go up and to the right over time. We're going to have some down. I don't know, man. At this point, I think we'll touch on a little bit of what's ahead this week. Well, I don't have to throw the thing up there, but I know we have on Wednesday, Jerome Powell is going to give a speech about, I think, the Fed minutes, if that's how that works. And then I think CPI is Wednesday, and I thought PPI is Thursday, which is interesting because this is all macro stuff. I don't know. It's in the news, so you think you got to mention it. But I know the CPI, the Consumer Price Index, is lagging. It's a lagging indicator, but the PPI, the Producer Price Index, is a leading indicator, I think. But again, you're well versed in Warren and Charlie, and they always said we don't care about macro. We just want to buy those businesses, the good businesses. Really?
I just read the 1987 letter, and they talked a bit about that, and it's the same thing as Robert Hagstrom. Is that the guy that was just? We were talking about him recently, right? Who wrote
Warren Buffett Way? Yeah, I'm finishing, and I got to get the new one. Sorry to cut you off, but
that's okay.
I'm finishing the only audio version I could find, and it's from 1993. So, needless to say, it's quite dated, but still some good information. But yeah.
But in the letter, they talk about what he was talking about that we ended up talking about just buying the business. Not buying the stock, buying the business, and which basically helps you, thinking about it that way, helps you tune out the noise and makes a lot of the macro stuff maybe a bit less relevant. So it was kind of interesting to read that right after we had just been talking about it from this other source. So
business, he calls it business-driven investing. You think about the business, and he likened it, and that's why I wrote about it in one of the newsletters, is that if you think about these businesses that aren't publicly traded, they still operate on profit and loss. They're still making money, but you have to think, okay, if there's no stock price, would you want to buy into that business? And that's the way you're supposed to think about just the publicly traded stocks. The only difference is they have that, every
Mr.
day
Market.
There you go. They have Mr. Market. And I thought that was really cool. So yeah, what would you look at if you didn't have a stock price to go by to decide if you were interested in the business or not?
And that ties back to the whole, if the stock market closed for 10 years, would you feel good about the companies in your portfolio? And I think that's a really good thing to keep in the back of your mind as you're exploring different potential investments. You know what I mean? Do I feel secure enough about this company to just, if for some reason I couldn't touch it, and if I were to tune out for a little bit, would this be okay? Could I come back and this would still be intact? That's always a good thing to keep in the back of your mind.
Yeah, and that's why I've been selling AT&T. It's just, as it's been running up over 18, it's hanging out there. And, I'm looking at the chart. You know, I sometimes get caught up in that too. You start to delude yourself into thinking that the chart will be able to, the technical analysis can predict the future. And it's just, so I'm comfortable selling over 18. So I've just been slowly peeling off shares. I had 56 shares sold this week. So still got a ways
Wow.
to go. But yeah, Darth's still
Wow,
in
man.
Missouri. Where in Missouri, buddy? Not in Joplin, are you? Joplin. I gotta think how to say that. I heard it. See, my brain caught it. They're like, Joplin. Man, that's one heck of an accent you don't have. Janice, what's going on, Janice? Bought more JEPQ and SCHD. I love Dirty Investor. Yeah, investing is like drugs to me, and I don't have money to get mine. Dude, it's like we say, passive income is one hell of a drug, man. All right, shots. We got them talking.
That's what makes spending so hard. A lot of people, for investing, it's like pulling teeth to do it. They do it because most people who do it just because they know they have to, and they'd rather not. But like for us weirdos, it's like we actually enjoy it. That's why it's hard to spend money on things outside of investing, because this is fun. This is a lot of fun for us. So it's a trip.
Oh God, yeah. Hey, dude, you have to tell me when we did this thing. I'm bringing my own beer. I'm bringing sandwiches
Yeah.
for the kids, and they're seeing other people, other families. They're like, "Look, we got these wonderful nachos that are $9 from the thing." And my daughter's like, "Oh, it's good." My initial instinct is like, "No, here's your salami sandwich. I made you at 9 o'clock this morning." So I splurged. I'm like, "Yeah, just go get them." So, but it's okay. Like I said, I saved 32% of my income last month. I think I'm going to be okay to let her buy some overpriced nachos on a Saturday night.
You have a 32% free cash flow margin.
Dude, I love that. And we said that the average American, I think the number was, saves 3% of their income. So they spend 97 cents out of every dollar that they get. And oh, look at this. A smart robotic lawnmower that Janice bought. Who makes that, Janice? Who? Let us know who bought that. There he is, Dividend dude. I think Dan, he's 18, I think,
Yeah. What's up, dude?
One of these young freaking dudes that I wish I started that.
I love to see it, man.
I think he's a Canadian Bitcoiner, I'm guessing. Edwin. Topping up the bags. Wait, bags of VTI? How are you a bag holder on VTI? You must have bought, it's almost, right? Almost at a 52-week high. Buddy, I don't know where you bought VTI to be a bag holder, but
I think he's just like talking about as if he went on a shopping spree and he's holding shopping bags.
I hope so.
Filled up his metaphorical shopping bags.
See, this is why I need you here. You help with us old, I don't want to say old guys, but
The old coot.
All right, Reese bought some Kreese. Now we're watching Cobra Kai, and that's like the big Emperor Palpatine, like the big bad guy, John Kreese. Reese I start over. I have LIKR to have bought. I think he's typing too quick or text to speech, because either it's really late and I'm not reading that right, or it's something about AbbVie before its last run up. You'd like to have bought some AbbVie before its last run up. Gotcha. Shamir, what options did you buy? You can't just say that. You got to tell us what ones you bought. All right, I think Hershey and Onward by Howard Schultz. Did you listen to his? Did you listen to his chat with?
No, I haven't.
Guys yet?
I haven't done it yet. I really have been wanting to do it, but for some reason with this one, I feel like there's going to be, and you'll have to let me know because I know you listen to it.
Mm-hmm.
I feel like there's going to be a lot of gems. I feel like there's going to be a lot of takeaways from this episode. So I didn't want to. I usually listen to this stuff when I'm working out or whatever, or just doing other things. But I kind of wanted to sit down and actually just listen to this and take notes on it as I was listening to it. So I just haven't had the time to do that or even do it in pieces yet. But I'll get around to it.
Yeah, so it's over, I think 3.5 hours long, something like that. So I just, when it came out, I happened to have one of those days where I worked by the Iowa border, and I'm by Chicago. So it was 2.5 hours each way so I had plenty of time to listen. And my hack is I have a Google Sheets. I showed this to you when we were in Vegas. And when I hear something, I'll pause it and then open up my sheet and then do a voice to text.
Okay.
That's how I do my notes. So I was writing this down when you were talking. I wasn't being rude, but Whiskey Tango Foxtrot I almost said it. WTF says, read When Money Dies by Adam Ferguson. An excellent read in a country of inflation. That's probably going to be number 35 or 36 on my book list. That just keeps growing and growing. And yeah, so
did you finish the Darwin book?
Yeah, by Pulak
You
Prasad. I did finish that.
Okay.
It was really good. I liked it. And I couldn't believe that he actually sided with me, because I've had so many people tell me that I'm crazy for not doing a DCF, discounted cash flow analysis. And he literally said the same damn thing that I say, is that he's like, it's so hard. Analysts, he said, expert analysts have trouble predicting cash flow 1 quarter into the future. So how are we going to do it 5 or 10 years into the future? And I know you're supposed to do it and play the game, but he's like, I don't worry about that. If I'm confident in the business, I'm confident that revenue is going to grow, and I'm confident that the business is well run and going to keep being well run, which is going to translate into growing profitability. He's like, I just buy it and hold it for at least 10 years. And he said, I'll know if I've been right or wrong after about 10, I think he said 8 to 10 years, something like that, or 5 to 10 years. No, I think it was 8 to 10. So he gives it a long time horizon. And I was like, wow, that's one of the first, notable professionals that I've heard say that, yeah, I don't do DCF, because it's just, remember that quote I used to share that they said it's like it's like a telescope looking into outer space. If you turn it 1 click right or to the left, you're looking at a completely different galaxy. And it's exactly that way with DCF. You change just a couple input numbers, just a little bit, and you get a completely different number. So, but hey, I think that's a debate that'll never end. It'll never go away. And
did he talk about what might be a suitable way to value stocks, or is he just generally, if the numbers look good, if the financials look good, that's enough for me?
More about ratios, and that's where I started looking at return on capital employed. He loves to look at a 5-year ROCE of 20%, and just things like that. Just looking at management profitability, because it's almost like dummy proofing it. If they can consistently grow the earnings and grow the profitability of the business, then just buying it, it's going to become more valuable. They know what they're doing, and it's a business. So yeah, I mean, it's not just like, there is no one quick and easy, dirty thing to look at, but there's a lot, right? I think Charlie's talked about that. There's a lot of qualitative analysis, because you can only do so much quantitative with the numbers. You have to have like that sixth sense of, sorry. Anyway. Sorry. So who's here? I hear people.
Joel Greenblatt does the earnings yield, right? That's him.
Yeah, that's the inverse of PE, right? Yeah. Anyway, Steve wanted us to look at Dow and Dine. I think we looked at Dine last time, Steve. I'm pretty sure we looked at Dine. So
is that Dine Brands?
Yeah, that was the
or is
one,
Dine something else?
I think you were in the chat when we looked at. I said I think they own Fatburger, but
that's Fat Brands.
Oh,
FAT.
That's right. Then maybe I don't. We'll look real quick for you in a minute here. So Dow and Dine, I'll remember that, because I'm almost caught up in the chat here. All right, Shamir thinks, 28 minutes. Newman. I'm a big Seinfeld fan. I love it. Here we go. Some quick buys here. Dividend dude bought Starbucks, Paycom, and Snap-on, and also some Salesforce. Yeah, Snap-on's interesting. They are a very good company, but their revenue has also been kind of stagnating. So that's one thing that I would look at. So I think it's a little bit expensive for a business that's revenue is kind of flattening off. But yeah, I'd like to buy more Snap-on. I don't think they're going anywhere. Rob, what's going on, Rob? Bought McDonald's and Starbucks. I see some people are buying after the dip. Oh, good. Yeah, because they dipped and now they're not dipping anymore. That's after the dip.
Yeah, I
Kevin
think
bought.
Starbucks is up about 12% in the last month.
I
So
don't
they're
know how to
starting to
say.
rebound pretty well.
I don't know how to say the word, but I I tweeted out when I think the day after the they had their biggest drop in maybe the company's history. I said I was buying more Starbucks on Twitter, and man, I got called names and I got called the R word, and I won't say it, but it just left such a bad taste because they said you are this word is going or this yeah you are word this is going to zero, and it's just like, hey, look at that, we're up 12%, my god.
It's
Oh,
so
okay, anyway.
interesting. It's so interesting to see that. It's so interesting to see that, and it's so interesting that this is something I think we often forget about. We can look at the same company and have two completely opposite opinions about its future outlook.
Yeah, and
Go ahead.
no, you say it.
Well, I
Speak
was
your
going to
mind.
say, looking at another company like Visa, for example, when you went to buy your 2 shares of Visa this week, there's someone on the other end who's selling their shares. And obviously there's more than one reason why someone would sell a stock. There's only one reason why someone would buy a stock. But, you're looking at a business that's growing revenue, extremely profitable. They're a free cash flow printing machine. They have a pretty clear runway to continue this growth as well into the future. And someone on the other side of that probably sees those same things too, but still for some reason or another determines it's not worth holding on to. It's just such an interesting thought.
Yeah, you're 100% right. So yeah, when you buy or you sell, there's somebody on the other side, and you got to ask, why are they like when I sold my 100 shares of Leggett and Platt? I thought about that for a minute. I sold at 14.05, massive loss from 34 was my average on 100 shares. Just ugh. But when I sold at 14.05, I paused for a second and I said, somebody's gonna buy these shares, and why are they buying them? Like
Yeah, what am
what
I
is their
missing?
game?
Yeah.
They might have bought it though because they wanted to ride it from 14.05 to 14.07 and just sell and make. Who knows? You don't know why they're buying, but to help myself sleep better, I like to say, hey, it's just some old retiree that's held Visa for, well, I guess
Yeah.
they IPO'd in 2008, but
Yeah,
yeah,
maybe they're using it to pay their bills or need the cash or something. You never know.
helps me sleep a little better. All right, John's saying that Dow sales are down a bit. All right, we got to do news here, so
Okay.
we'll I'm almost caught up. I apologize if I am going past anything. So we're gonna look at Dine. Shamir, thank you for saying that. IHOP or Dine owns IHOP. Janice said that. Read what the happiest retirees know. See, you guys, you're through books.
There's too many books out
I'm
there.
just not going to be able to make any videos. I'm going to just only be able to read books in my free time.
You know what we're going to have to do, man? We're going to have to start our own version of like Founders or Acquired or something like that, where we just get together and talk about books. Like that would be a good excuse to just sit around and read.
And I'll bet you that's what gives them a great motivation I'm sure they block out, whatever, 4 hours, 6 hours in a day to just read. And to me, it's like, I don't know, it's kind of like Twilight Zone. I don't know if you've ever seen those where the guy was in a weird universe where there was no other people and there was no time, and he was in a library. He loved to read, and then he knocked his glasses off his face, and then he was looking for him and he stepped on him and you hear the crunch, and then he was like, "Oh, I had all the time." It was just. That would be me. So I'd lose contacts. And I'm like, I can't, Well, I'm nearsighted, so actually it would be okay. But
Yeah.
okay, we're gonna do news because I'm caught up, and I just can't stop clicking on you guys. I'm just so thrilled that all of you would join us in our gathering here every week. But Rob, you bet, buddy, you bet. Averaging down in Starbucks, I think they're going to be fine. By the way, and we'll do news after this. We went to a Starbucks yesterday, on Navy Pier, and it was just crowded. It was crowded. Plenty of people in there, people waiting in line. A lot of people ordered on the app. It was funny. There was like 3 people in line and all these people just standing around waiting. And I realized, like, my sister-in-law, she ordered as we were walking to Starbucks. I'm like, are we going to go in line? She's like, no, we're waiting. I was like, oh, on the app. Okay. All right, so we'll leave off with Rob. I'm going to do some dividend news, and then I think we had Dow. I'm going to put you on with me here, Ryan. So, yeah, some news. Do some little quick news here. I think you can see this, right, Ryan?
Yeah.
You can see, you can hear. So GE got a dividend safety upgrade, which is interesting. They were ones that did the reverse split, and it was successful. So anyway, there you go. GE. I don't know if I'd invest in them, but I haven't really looked at them. Have you?
Not really.
Yeah, same here. Might be an interesting one. Alexandria, they talked about this on the Dividend Talk podcast, raised their dividend 2.4%. And again, you can pause the video and zoom in on any of these. I don't want to spend all day on these. Welltower raised their dividend 10%. Yeah, nice. Healthcare REIT, man. I'd still be worried about them, but as they say, we got an aging population and a conservative payout ratio they have under 75%. So, yeah, it looks like the dividend was frozen for a long time. Oh, hey, if I just read the headline, it's their first increase since 2017. And what do I say? I'm like, whoa, that dividend looks like it's been frozen. Duh. They reaffirmed their safety score on waste management. If you don't know, they acquired a medical waste company, Stericycle. So they want to. There you go. They're trying to expand their business. They paid $7.2 billion, and it was a publicly traded stock. So I think it's an all cash deal, I believe. Baxter, they got a dividend downgrade from 70 to 50. I don't know much about the healthcare equipment company, but I think I've seen their products when I've gone to the doctor's office before. But a couple more here coming at you. United Health, there it is. The 12% hike, that is every year since 2010. They are the biggest health insurer in America. So very 99 safety score.
Those premiums went up, and so they raised the dividend.
Yeah, that's one thing. I should ask you. I don't know if you want to tell. Hold that in your head. What do you do for health insurance?
My wife gets it through Lululemon, actually.
So you're with hers. Nice.
Mm-hmm. Yeah.
I'm gonna have to just get some blow-off job. I'll be a Starbucks barista just to get in health insurance. Enterprise, they reaffirmed. I'm probably gonna buy more. I broke down and bought some more in the mid 28s. And let's see, Becton Dickinson. Fun fact that Laxman Narasimhan, the CEO of Starbucks, used to be the CEO of Becton Dickinson. So yeah, they acquired. They're going to acquire Edwards Life Sciences Critical Care Unit. I don't know enough to comment intelligently about that. So if you own them, and then Eaton Vance upgraded. I think this is I don't know, this is like Jeremy from Dividend Stockpiles neighborhood. Oh my God, the CLOs what are these called, Ryne? I forget their name.
Is it a closed-end fund?
Closed-end fund. There you go, right there. Look at you, beat to it. The CEFs, CLOs. I think the closed-end.
That's like
funds,
the income factory type stuff.
Yep, exactly. So there you go. They upgraded from unsafe to borderline safe. And then the last two, THQ, downgraded. I don't know, Aberdeen Healthcare Opportunities. Looks like they're missing a vowel in their name there. And by the way, Pat Sajak retired from. That's where we're missing that vowel. He retired from Wheel of Fortune. Verizon. There you go. We do need to do a dividend Wheel of Fortune. Guess the company.
Yeah, that'd be funny.
So anyway, we'll do real quick for you, Steve. He wanted we'll do Dow first. I know a little bit about Dow. So dividend safety score of 45, 5% yield. Looks like it's
a chemical company, I think, right?
Yeah, they'll have a big write-up here. Steve, this will be for you, buddy. I'm just going to scroll through this. So this is Simply Safe will do their own opinion on the business, tell you what they do. It's really a nice, concise, as I'm still scrolling. So if anybody wants to read through Dow for whatever reason, go ahead. They've paid mostly reliable dividends since 1912. There we go. And...
Yeah, they're dividend. I thought they were a dividend king.
Nope.
Maybe not.
Yeah,
not according to
this. I think I don't know what you're thinking. Yeah, I thought that was too.
I'm thinking of Dover
Corning?
Corporation.
Dover. They're out here by me in Downers Grove, Illinois. So there you go. They've had that dividend frozen for a while, so it's $2.80 per share every year. But yeah, the dividend yield's in line. I don't know. I don't know enough about them that much, but here, let's look at their revenue real quick, Steve. We'll look at look at that free cash flow payout ratio was at 90%. That's a little high. Flat free cash flow per share, just not exciting. Nothing here is exciting me. Sales growth will go negative, then jump, then negative. Yeah, look at that total sales, just very cyclical. Yeah, not what I'm looking for. Buying back shares a little bit. Really low return on invested capital. I don't know, Steve. If you want to knock yourself out, but honestly, this doesn't really. I would need to know, and I don't know if you agree with this, Ryne. If you were looking at a business like this, wouldn't you need to think there was going to be some kind of really big growth vector that's coming up to, really drive it forward? And I don't know.
Yeah, I mean, otherwise, there's not really anything that jumps out to you as far as the financials go.
Yeah, and this one I can already tell. Look, it's like a roller coaster with that dividend. I think you're looking at the yields here.
What restaurants does Dine Brands have?
Applebee's, IHOP, and I don't know what Fuzzy's is. And then they also rent company.
Were we talking about Chili's?
I think
we
were.
You tweeted something about Chili's, and I think I replied to it.
Did I?
I think maybe.
Oh,
it was one of those type of restaurants.
No, it was the
$10.99 or something like that, right?
They want to compete with McDonald's, so they're doing their big ass burgers that look like a real burger for the same price as a Big Mac. But Steve, I don't know if you're just looking at yield here, doing a little bit of yield chasing, but look at that's just that's what I say to that dividend history. And it's just been frozen. So you got two frozen. Yeah, they can pay it, but look, free cash flow per share 10 years ago was $6, and the last 12 months it's $6.17. And it should be $7.66. That's a guesstimate. Just, I don't know, man. Nothing gets me excited here. Revenue is just up a little bit. I don't know. Again, man, return on invested capital is just Apparently they don't have any debt, or maybe they do. I don't know. Sometimes this is off with their unrated one. Anyway, Steve, not my cup of tea, either of these. So, yeah. Sorry to burst your bubble, buddy, but if it was up to me, my opinion is no. I give 2 thumbs down.
Still interesting to take a look at those. I think it's it's fun to I don't know, it's fun to kind of like because just in those 2 minutes or whatever you're looking at it, you can kind of decide, is this one that I explore further, or is this a pass? And it's fun when you randomly stumble upon one that you can put in your, save for later bucket.
Which, by the way, dude, shout out to you. I've made the on Simply Safe. I've shared it a few times. I think I'm up to, I don't know how many now, but maybe we'll look at that in a minute here. But
yeah, you did your investable universe.
Yeah,
nice.
I think I called it we'll scroll through it real quick.
Yeah, but mine's just called the companies I want to buy, or excuse me, the companies I might want to buy.
Dude, really, I don't know how long it took you to think that one up, but it would have taken me quite a while to come up with something that slick.
Well, pretty creative, so.
Here, I'll show you guys my watch list here. But anyway, let me get through your comment, Jim. Yeah, so it's kind of funny how you guys saw me just run through that real quick. And that's why I like Simply Safe, is that for me, I've gotten so comfortable with it that it gives a really nice 10-year, very clean, very quick chart of just bar graph, and it really lays it out nicely, I think. So you pay a bit of money for it, but and those right there did nothing for me. So anyway, what were you saying? Simon is buying up abandoned malls into Gen X retirement homes. That might be interesting. Of course, I sold my 10 shares of Simon because I kind of lost touch with it, but I wanted to put that into more ADC and whatnot, Vici. Orange Julius and Glamour Shots. Dude, Jim, these people are too young. They're not going to remember Glamour Shots. Do you remember Glamour Shots, Ryne?
I've never heard of Glamour Shots, but I definitely know Orange Julius.
Yeah. Right, so Glamour Shots was just
Was it
you
like a
would go
photo
for,
thing or something?
for professional family photos and things like that, or if you just wanted professional headshots, you'd go to Glamour Shots. But
We used to
let
do
me
that
show.
at Sears growing up.
Ooh, do remember that. So I have my quality watch list is what I call it, and
Okay, that's cool.
the way I've done this is up to 43 holdings. So I'm slowly going to go
Wow.
through these, and then so the way I did it, whenever I started the watch list or put the stock on there, I just put one share at the price that it was when I said, "Oh, this looks interesting to look through." But yeah, I mean, like Apple's easy, but then Armanino Foods, ticker AMNF, is a very interesting one that I'm going to dig in it. And all of these, I'm going to go through the annual report and just do my own level of due diligence. But yeah, Amphenol Build-A-Bear Workshop, oddly enough, just started paying a dividend, and that jumped out at me. There's
Casey's.
Casey's.
I like Casey. I learned about that one from your video and have been looking into that one a bit more.
Yeah, the pizza and beer headquarters.
Yeah.
Wonderful. Hey, everything you need for your white trash bash,
I like the idea of investing in like gas stations and convenience stores like that, though. I think that's a pretty
Dude,
pretty safe type of investment.
just people in this country are so unhealthy. Not judging. Well, I guess that is judging. I just judged like very harshly and said not judging. But yeah, Dick's, Domino's, Exponent. I think I might have made a mistake there because that's not ringing a bell, or maybe not. I'll have to look. Some of these I kind of threw on there, but there you go. You guys are seeing my quality watch list. Landstar System, don't even remember that. I did some screens, looked for numbers, and then ran through Simply Safe, and these are all the ones that passed my initial filter. Meta, oddly enough. Mueller Industries, so they're not even rated, but they looked very interesting to me. Ticker MLI. And kind of winding down. Yeah, Nathan's Famous. Pretty easy business to understand. Nike on there. There you go. Credit to Ryne. Shout out. You re-put Old Dominion on my radar. So ODFL, you guys look at that. Paychecks, Pulte Group looks solid. Playtika, Pool Corp, and yeah, even Papa John's. I got that on my watch list. So there you go. Rollins. I know it's just riveting stuff, everybody. So, but hey, you're getting free ideas here if you want to explore them further.
So what do you think would like with some of those, what do you think would cause you to remove them from this list?
Well, it would have to be, let me stop sharing this so I can see you. It would just be looking deeper into the business, getting a better understanding. I think that is a very quick quantitative screen that it passed.
Yeah.
But now I need to like build the quantitative aspect of it. My feeling about management, my feeling about the product and the industry and the sector, and thoughts about it going forward. Just things like that. So it's a weird thing to say. There's not one quick, hard, fast, and pleasurable answer, but
yeah,
I think that's the thing. Everything you saw on that watch list passed my like bare minimum quantitative screen, and now it's going to be a deeper dive and build the quantitative aspect to it.
That's pretty much how I've approached mine. Yeah, that's pretty much how I've approached mine so far as well. And what I'm kind of doing in narrowing them down is I'll do that exact same thing you just described, but also compare them to some of the positions that I already own. Like for example, I have Microsoft on my list right now, and I think Microsoft is undoubtedly a great business to own. But then I think would it be good for me to add Microsoft, or would I rather just add more to Apple, or would I rather add more to Visa? And I know they're different. Yeah. Like I know they're totally different businesses, but I'm trying to weigh that opportunity cost in my head while thinking about this too, because it's fun to add new companies. It's like adding something new. It's like getting a new watch for your collection or something like that.
Yeah, and
but
then also
it's also like at the end of the day, it's just more to keep up with. So you got to be careful, and yeah. Anyway,
Oh, it's easy to buy, right? I mean, all
yeah,
those stocks right there, I could have probably just bought, just, oh, that looks good, buy it. But
yeah. What were you gonna say though?
oh, it's also looking at the other businesses, like if they have a moat, getting a feeling for it, like Microsoft, obviously very sticky, very difficult for people in businesses that everybody's trained in Microsoft, their products, to just switch to something else. So looking at competitors, and again, that's the God dang it. That is the qualitative aspect of it, thinking about who's nipping at their heels, who could, come up from behind, overtake them, put them out, those type of things. So, yeah, CSX, that's the train company. So, not lately, but D Nice, you know what? I'll give you a safety score on that just because I don't think I've seen your name here before. So, let's see, just really see, I'm already putting all these acronyms. There you go. Yeah, industrial rails. So dividend safety score of 85. And yeah, the rails are really capital intensive businesses. Here, I just can't. I can't help not looking at the dividend. I'm like a junkie, Yeah, solid dividend growth. Again, the railroad companies. Who's going to come and start a new railroad company to compete with them? They've been raising that dividend a lot. Yeah, it's probably starting to get to a good point. Wow, only $32 a share, but I'm sure they have a couple billion shares outstanding or something. Yeah, low free cash flow payout ratio. Just gonna look very quick here. Yeah, this is what you like to see. I mean, free cash flow per share was pretty good growth. I mean, it's been flat for a few years. It's because they've had negative sales growth. There you go. Yeah, 1.99 billion shares. Again, that's why you can't just look and say, "Oh, it's $30. It's cheap." You got to take into account how many shares outstanding are there. But yeah, sales. I mean, 12.5 billion to 14.7 billion. So I mean, solid. I think it's not exciting. Good, manageable debt, moderate, or modest debt. I think it's okay, man. I mean, any of the major railroads, I think Norfolk Southern, they're all going to be okay, I think. So, there you go. Shannon used to own good old CSX. Sorry, my cat, my wife, when she goes in the other room, everybody, you've experienced this before. It's like I think Janice said, his emotional support person. He gets louder and it's like a little child crying. Does Peanut do that?
Yeah. If you shut doors, he will paw at the door until you let him in.
Yeah.
It's so funny though. We'll hear him. He's got, I don't see it. Peanut's right there. I don't
Oh, there
see
he
it.
is. It's
Yeah.
Peanut.
I don't see it in the room I'm in right now, but he's got his favorite toys is Birdie. And I think that's his like emotional support type thing, because he will carry it in his mouth around the house. And what's really weird is when he does that, he'll like meow really loud when he's carrying Birdie around in his mouth. It's such a funny thing. Cats are so funny.
Yeah, we had one of our old cats used to do that passed, and she would do the same thing. It was like a little mouse. She would pick it up and just walk around and do like the deep yowling, and we're like, oh, I guess she's okay.
It's so funny. So we've got this blanket at the foot of our bed. Every single night, middle of the night, he'll come and he'll pull it off with his teeth. He'll like pull it off and then drag it out into the living room. And so we'll wake up every morning and our blanket's just in the middle of the living room.
It's like that. It's like that movie. It was the Ghost, the Spookananny movie with they film their room. Somebody in the chat. Let me see. There we go. Keep that in your heads. Oh, yeah, United We Don't Care. It's hard to disagree, but Dow makes scrubbing bubbles and fuzzy tacos. I'm not quite sure. I should have put that one on there, Shannon. I think you slipped one by. So, hey, Puck Man, what's up, man? It's been a minute. Back from knee replacement surgery. Well, hopefully you got some. All right. Zimmer equals fake knee. I'm not sure what that means. Do you know what that means? I don't know. Yeah, he's wait, were you Puckman? No, he wasn't the one that was gonna meet with Jonah. AI is a huge bubble. Yeah, I don't know, man. I still want to say it is, but it could be a bubble for a while. Do you think AI is a bubble, Mr. Williams?
It seems that way.
It sure does. But
It
put it.
certainly looks like what previous bubbles have looked like and have been.
Yeah, in my time investing, when I see a bubble, it's when every business starts mentioning it on the earnings call, and anybody who has anything to do with when it was just blockchain or cannabis, you had EV, lithium, anything with batteries, battery technology. So right now it's, I'm sure I'm missing a few, but yeah, right now it's AI. Anything with AI is just.
Well, it's like you always say, like with NVIDIA specifically, you and I both don't know that industry enough or that business enough to know why its products are supposed to be so much better than their competitors. And I would wager, I don't know this for sure, obviously, but I would wager that the great majority of people that end up buying an NVIDIA don't really know that either. They're just chasing these gains from it that have been going on lately.
Yeah,
And that's not sustainable.
I make the joke, but there's a lot of truth in there. I say I don't, if you laid out in front of me a Intel chip, a Micron chip, a NVIDIA and an AMD and a Qualcomm chip, I couldn't tell you what makes one more desirable than the other or put them in an order of, do you know what I mean? And so I've tried looking into it and I get so lost. I go down these rabbit holes of trying to understand, and it's so much. Right in the too hard pile, but
Yeah.
and I know just because it's an easy analogy, I say now Dorito chips and Frito-Lay chips and Utz chips and all the other chips. I understand those chips, and I know that when we buy the discount store brand Dorito knockoff, and I try the Dorito, like it's not even close. I don't care what anyone says. It's not even close. So that I can understand, but it's, I want to give a shout out here to, real quick. D Nice just found a channel. Make sure you check out Ryan's too if you haven't. Now it wasn't Blair Witch. I can't. Yeah, I put in that movie. It was. It'll hit me later. But this guy right here, he was on he's a former, he was in G3 weapons department. I was in G4 weapons department on different aircraft carriers at different times, but very small world Jared. He was an aviation ordnance man, an AO, and I was an MM. So there you go. A little bit of talk that's going to be right over the head of everybody. There we go. Zimmer Bioholdings makes artificial hips and something else. Hips and knees. There you go. I was like, and what? You can't. Yeah. It's not the size of the dividend, but how you use it. And Visa is using that thing really, really well. So Jared thinks that AI is a bubble. That's really nice to get somebody that works in tech to say, though. Oh, quantum computing. That was one. I remember. I think I may have even bought some IBM because of quantum computing. That was another one.
IBM's another one of those that I look at and it doesn't pass the sniff test because the first thing I see is declining sales.
Yeah.
So you kind of lose me after that.
You know why I sold them? I sold them when I started reading their adjusted free cash flow. And a couple people explained it out as I guess it's legit, but I don't see any other businesses having to use adjusted free cash flow. It just seemed it stunk. I didn't like it. It just stunk. And, maybe I'm 5 years too early in selling, but I was like, you know what? I'm just not comfortable that I'm going to use that to sell. And of course, then AI happened and it, shot through the roof. But yeah, Qualcomm for mobile communications, Broadcom for overall connectivity. And yeah, it's, again, I don't know, I'm sure, there are people that understand it, but for me, it's just, it's my too hard pile, which is fine. Like they say, it's not how big your circle is, but it's defining the perimeters of that circle of your competence and knowing what you know. And it's not who has the biggest circle wins, as we've clearly seen with some other investors.
And I think as time goes on, like just spending enough time in this game, your circle of competence will expand over time. Like at some point you'll go through all of the companies that are within your immediate circle. And then you'll start looking for things that maybe toe the line of being within the boundaries of that. And there will be times you'll have to be forced to learn about new industries and new stuff like that. But it's good to stick with what you know at least at first, and then move out from there.
And it's just, you become a better investor and consumer and whatnot. So, all right, we're wrapping up here. Longacres, what's up, man? Quantitative screening is your bread and butter. Upset I missed the beginning. No worries, man. You can come back. But yeah, you just had a podcast out on how you're beating SCHD. So that's an interesting one. I don't want to spoil it. I want people to go find your podcast. So look up Longacres Finance, and I think you have a YouTube channel as well, right? I usually listen to your podcast. So here, we'll end with burn survivors. And what's up? Thanks again. So what's on your docket? I don't know if you want to give a spoiler alert, or what do you?
I might buy some more Johnson and Johnson this week. That's what I did this last week. Still looking really good. One high 140s. So I might try and pick up another share of that this week. We'll see. I'm so close to starting a position in Vici. I don't know. I feel like I just need to do it and rip the Band-Aid off and do it. But yeah, I don't know. Between Johnson and Johnson, Starbucks, and Vici, those are like the three that I'd love to acquire or acquire more of.
For myself, at the top of the list is Visa. I hope
and
it comes
Visa
back.
Yeah,
Visa. And now see, I've price anchored myself. I was very comfortable buying at like 268 to 271, and now we're at 280, and I'm like, it's too high, and that's something I have to stop doing. So Visa, I bought a few more J&J. I think I'm at 110 of J&J.
Nice.
Yeah, and then ADC, I'm really trying to get to 100 shares of that quick. I'll be selling more AT&T, so I've been using that as like a slush fund, just as it's been over 18, just to do where I can a little tax loss harvesting, and then it's just probably a little more Vici. I want 200 shares of that. So, hey, that's what we're doing. Oh, and Nexstar, dude. It's been struggling hard, and I don't get it. And it's one that I've shared. I've shared this with Ryan. I'll text him, and honestly, the price is making me second guess myself. But as Warren has said, and a lot of other investors have said, that they ideally want a stock to either go nowhere or decline for like a year or two while they're accumulating up to a full position, and then as soon as you got your full position, ready for it to run up. So it's, hey, we're all going to learn something. I'm not going anywhere. I'll be sharing what happens with you guys. But because of the stock price, it's making me question and really think hard about, what am I missing here? What have I got wrong?
I mean, though, in the short term, it can be a myriad of things that have nothing to do with the company itself that's bringing the share price down. So all those things, and you also know, take your own advice. Buy the business. You're buying the business. You're not buying the stock.
Yeah, and that's the problem I've been having. I am buying the business. I'm looking at the business. I keep going back to the business, and then the next day stock price drops. I look at the business. I'm like, yeah, it looks good to me. And then 2 days later, it just drops again. I'm like,
I know,
looking
man.
at news.
It's a trip. It's a trip.
And then I'll end with this. The hard part though is looking at what you could have bought. I'm like, if I just would have bought Visa, put it all into Visa, everything I was putting into Nexstar starting 2 years ago. I mean, it would have been so nice, but all right, beautiful, man. So thank you again for hopping on. It's been a minute.
Yeah.
So I'm glad you could.
This is the last time. This is the first time we've really chatted, I think, since you were in Vegas.
Yeah.
I mean, we text all the time, but like this.
So Ryan got me out of. I text a short novella. It's just my bad habit. I have friends that would say, dude, this is way too long. Like, send me something shorter. And then Ryan was just started with the voice messaging. So I was doing that. And now I've gotten back in that. I don't know why. Anyway, too much information. You guys didn't.
It's because we need to wean ourselves off of doing like 12-minute voice messages,
I guess that's the thing. When you learn a skill of talking on camera and just yada 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 yada, all of a sudden I'll leave him a voice thing, and I'm like, oh, it's a 12-minute message. I'm like,
I do it too. So that's what it is, though. We're so used to talking to the camera, basically just talking out into the ether, you know?
Yep.
And so it totally rubs off and we're sending those messages.
All right. So and again, if I don't end it here, we'll just talk
I
all
know.
night. And
Thank you for
can-
having me on, man. This was fun. I will do this anytime. And thank you all for tuning in and hanging out with us.
And of course, obviously, if you don't know who Ryne is, check out Ryne Williams' YouTube channel, subscribe to it, and all that good stuff. And all of you, thanks for gathering with us once again for our weekly dividend communion. I really enjoyed having you, and I look forward to seeing you again next week. I'm a kid of the 80s, and I have Pee Wee take me out. So I will see you all next week.